Fundsupermart.com.
How did the Schroder Asian Growth Fund perform in 2012, and what were the main drivers and detractors of performance?
The Asian Growth Fund had very strong absolute performance last year, up about 30% in US dollar terms, which was also about 7 or 8% ahead of its benchmark within the regional markets. The success of last year we can really attribute to the bottom-up stock picking. There was no one market which particularly dominated, but we had positive stock selection in almost all of the markets across Asia. We also benefited from the overweight in the fund towards some of the mid-cap names, where the fund has a big position in mid-caps relative to large caps, and also in more domestic consumption-focused names relative to exports and some of the deep cyclical sectors, and particularly in North Asia, Korea and Taiwan, where we have underweight positions.
The Schroder Asian Growth Fund has been a Fundsupermart Recommended Fund for a total of 6 years as a result of its consistent returns and downside risk management. What is the secret behind the steady performance of the fund?
Our view is the key to successful investing in Asia is you have to be flexible, you have to be unconstrained, you have to get away from the benchmarks, because the benchmark composition in many of the Asian markets is not particularly attractive. The benchmarks are overexposed to many of the global cyclical themes, and they're underexposed to the more interesting domestic consumption, consumer cyclical stocks, the areas that we really want to be invested in. We also want to get away from many of the mega cap, SOE, large cap companies in Asia into the more dynamic mid, small cap area of the market. And the Asian Growth Fund has that flexibility to go both away from the benchmark in countries, but also away from the benchmark in market cap. And we're a very bottom-up, research-driven house. Schroders has very strong resources within its research team. And the focus on bottom-up, company-level fundamentals, looking for best-in-class ideas, and really making sure those high-conviction ideas get into the portfolio. I think that's what's driven the performance and given us the best chance of outperformance going forward as well.
Based on the fund's latest fact sheet, the top 4 country allocations within the portfolio comprise of Hong Kong, China and Taiwan. What are the reasons for the bullish view on the Greater China region?
We're bottom-up stock pickers, so our large positions in Hong Kong, China, Taiwan really reflects the numbers of attractive ideas we can find in those markets. And particularly in Hong Kong, it's a very broad, deep market which has exposure to many different sectors. So we can expose to regional businesses, global business as well. So it's more about the choice of companies rather than a very strong view on Hong Kong itself. China clearly is a very dynamic economy, and there's a lot of change going on there. There's some very exciting bottom-up stock ideas for us, so we're constantly looking for new ideas there. Taiwan is interesting really from the technology sector. It's clearly a powerhouse in the technology industry, has some very dominant world leaders there. So again, our stock selection in Taiwan is very selective to a handful of IT tech names.
The IT sector is well represented among the fund's top 10 holdings. What is your outlook for the sector?
In very broad terms, IT has had a very tough time the last few years. The emergence of smartphones and tablets has really killed off a lot of the growth in the PC industry. And a lot of the Asian tech industry was really geared into the PC supply chain. At the same time, in the growth areas like smartphones, as everybody is now aware, there's really only 2 companies that have made any money, which is Apple and Samsung. And so again, the supply chain in Asia for smartphones has been under a lot of cost pressure, and you also see rising wages and currencies in Asia which are putting pressure. So within IT, we have to be very, very selective, and our exposures are very focused on some of these global leaders, some of the more diversified plays that are geared into that growth in low-end smartphone growth, and are not vulnerable to the decline in, as I say, in the more traditional parts of the IT industry. So the overall outlook is still very tough and challenging, but the winners within that industry still have the scope to make very attractive returns.